In today's video, we're going to be following up on the two new strategies that I'm using for Yieldmax, Roundhill, and Defiance funds to potentially outperform the markets even more from here and earn risk-free dividends in the process. These dividend funds help us earn over $400,000 per year in dividends and outperform the market. We're up 24% for the year, and after today's gains of being up 1% or $12,000, we're going to be up 25% tomorrow after these numbers update. So we're up 25% for the year now. The S&P's up 16, the Nasdaq's up 17, the Dow's up 7, and the Russell's up 5. We're beating all of the indexes handedly with our approach using these dividend funds and some margin usage. These dividend funds and margin help me live financially free from a 9 to 5. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So I was pleasantly surprised by these two new strategies that we're implementing in the portfolio to get more performance and income in the process. These puts that we sold on IWMY and QQQY did very well today. We're up $278 in the QQQY put today, and we received about $5,000 from selling the put option in QQQY. IWMY didn't have as good of execution, but that's fine. As time goes by, this will improve. Today, I was down 1,000 in my QQY puts to start, and then as the market rallied and we're up about 1%, these came back. So I expect IWMY to do the same as time goes by, and that gave us another $3,000 while reducing our risk in the process. And the best part of selling options on these funds is that the maintenance is 20%. On the long side, it's 30%, but when I sell these options and lower my risk and my margin in the process, my maintenance is 20%. If you need help understanding maintenance, that's in my Volume 3 e-guide. For every $1 you put in your account, you get $4 of purchasing power. I'm just using a small amount of that over $1 million in purchasing power to get ahead, and then my dividends of over $400,000 per year will pay back my margin debt in less than 1 year. I'll then be left with all these dividend-paying assets to myself, paying monthly cash flow for life that qualify to banks for loans. That's how we live free from a 9 to 5, is we use our dividends to give us our pay stubs. Trading gains cannot give you a pay stub, plus trading gains aren't reliable. 90% of traders lose over time. So I use these dividends to qualify for more loans with banks, and my margin debt does not show up on a credit check. So my debt is good debt. It's not showing up on credit reports to the banks, and yet my dividends will pay this down and act as qualifying income to level up my account and live free from 9 to 5. I think this is the best strategy in the world. I've never heard of this strategy being done anywhere else on YouTube. That's why I started my YouTube channel. The approximately $400,000 that I have in margin debt here is not a problem margin interest wise, because I've negotiated my rates down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, you get free access to Discord for life, and you get my phone number for life. So just keep this in mind. I help walk you through your negotiation process and negotiate your margin rates down anytime. I'll send you the script whenever you're ready. So 6% interest roughly is what I'm charged for my margin interest. And even if I was charged 12% or 15%, it wouldn't really matter, because we're getting dividends on these funds that far outweigh the margin interest charged to us. There's an arbitrage opportunity here with our dividend yields being north of 50% and our margin interest being around 6%. And again, our leverage is going to go away in less than 1 year because our dividends pay this back. So every month we get about $40K in dividends, and that raises our available withdrawal by $40K every month. This puts us further and further away from margin calls. And so I always say here at this channel, I can withstand over 20% corrections in the market and still withdraw freely out of my E-Trade brokerage account. I swipe my E-Trade card and go wherever I want in this world with my E-Trade checking card. Okay, I can buy cars, clothes, shoes, whatever I want with my margin debt, and then it just comes out of my available withdrawal. So with this all being said, I don't mind my margin interest, but why not pay down our margin more when we can to lower our margin interest wherever we can? So we pay down our margin by $10,000 today by selling these puts on QQY and IWMY, and they lowered our risk in the process. If you take the strike price of $40 for IWMY and minus the premiums received, which is $1,500, now our cost basis is around $25. So we're controlling IWMY and QQY at much lower prices than everyone else is controlling them at, and we've lowered our margin in the process. And again, the best part of selling these puts is that they're low maintenance, okay? 20% maintenance. So my available withdrawal barely even budged when I sold these puts. And if we were to fall to our cost basis of around 25 or so during the next market crash, I would be happy to buy these funds at those prices. I want to get assigned to these funds at those prices because those are good prices to buy at, and they will increase our dividend yield in the process. So I really like the idea that you can sell puts on these Defiance funds and lower your margin and risk in the process. And we can now buy YQQQ to protect ourselves from QQQY. Okay, so here's YQQQ. It's the inverse of QQQY. So we have our NASDAQ protection now, just in case the market goes south, and this is going to pay us dividends. So we're potentially securing the puts that we're selling on Defiance funds and the positions that we're buying outright in Defiance funds, we're securing them with YQQQ because this is going to move inverse to the longs and give us a dividend in the process. So we're going to increase our income really soon as these dividends update. And today we even added to YQQQ. I alerted all of my members who watch my live videos because the market was up about 1% and we're approaching old highs again. So I thought it was a good time to add to YQQQ, get defensive, and increase our income in the process. And this hedges our sold puts that we just sold with Defiance funds, which lowered our margin and our risk again in the process. So I really like selling options on these funds. Again, if you need help selling options, that's in my volume 6 e-guide. And I really like the idea that you can buy YQQQ to hedge these options. Okay, it's almost like a risk-free way to make money, it seems like, or at least lower your risk dramatically to make the money. Okay, you're going to hedge with YQQQ and you're going to lower your cost basis by selling the puts with these Defiance funds. Okay, so we have YQQQ to protect us in the event of a downturn. We also have our put options on that were up over 1,000% during the recent downturn. Those puts really helped shield us from the downfall and kept our available withdrawal high, keeping us far away from a margin call. If you need help buying put options to ensure your portfolio like me, that's in my volume 5 e-guide. So again, I was pleasantly surprised with how these two strategies are working so far. When I sold the puts, I got pretty good performance out of them today, and our YQQQ hedge was down like it should be when the market was up. And it wasn't even down as much as the market was up. The market was up about 1%, the NASDAQ was, and our YQQQ position was down about 0.78, and that's typical of Defiance. When the market was down recently, QQQY was down less than the indexes. So I really like how our hedge in YQQQ was down less than the market was up, if that makes sense. The market was up 1%, YQQQ was down only about 0.8%. So it's still going to give us that protection on the downside, but when the market's moving higher, it won't hurt us that bad as the market moves higher, as you saw by today's performance. So very happy about the performance with that hedge and happy with the performance of our sold puts. The rest of our performance today came from Cornerstone, of course. Cornerstone is our largest holding. Cornerstone is a 5-star fund. Okay, where's Cornerstone? Here it is, up 1.5% today. That's very strong. And everyone knows who follows my channel, Cornerstone is the largest position in my portfolio because it's 30% maintenance and it moves up when the market's up. So here it is on the Morningstar chart. It moves up or left or right on its chart. But if you go to Cornerstone on E-Trade, you'll see, for example, on a 10-year chart that it moves sideways to down over a long-term time frame. That's because you have to factor back in dividends, drips, and rights offerings. Then your chart will look more like the Morningstar chart, okay? And then you'll see why it's a 5-star fund, because you're getting the 20% dividend every year in Cornerstone and the 20% premiums in Cornerstone, okay? It averages 20% gains per year and 20% dividends per year, and then it gives you the special drip, which is unheard of anywhere else, okay? If you own Cornerstone up here at the highs, it's dripping its 21% dividend down at the lows for free money every month. This is the best fund in the world, in my opinion. It's one of the largest closed-end funds in the world, and so that's why I have half of my portfolio in Cornerstone. It's 30% maintenance, and it has that special drip with the dividends and the premiums at the same time. Just remember to time Cornerstone between its highs and lows, okay? Between its rights offerings. That's how you really level up your account. So if you bought Cornerstone around 10 during 2020, it rose all the way to 14, giving you approximately a 40% premium gain on top of your 20% dividend. If you need help playing Cornerstone, that's in my Volume 4 e-guide. And when you buy my e-guide, you get free access to Discord for Life, where we give you the Cornerstone rights offering announcements. So you don't have to worry about the timing with Cornerstone. We get the announcement here at Discord and we alert you of the rights offering announcement. We're also outperforming the market with Yieldmax, Cornerstone, Defiance, Roundhill, and our margin usage. And even during the recent crash, we're still outperforming the market. So this proves that this strategy works, but you have to do it right. You have to watch your maintenance. You have to watch the premium levels in Cornerstone and stay disciplined by owning the indexes. Okay, if you like the video, click like or subscribe. I'm really appreciating likes. Please keep those likes coming. Like the video right now if you haven't liked it already, because it really helps push this video to more audiences. And I'll talk to you soon, everyone. Thanks.